Thank you for tuning in to Starkey Multifamily Podcast. I have with me Gabriel Hamel. I'll give you a little bit about Gabriel. Gabriel is the founder and CEO of Hamel Investments. He's a real estate investor whose passion for real estate business and financial freedom has helped him to amass a multi-million-dollar real estate portfolio consisting of single-family homes, multifamily apartments, commercial real estate, and mobile home parks. From humble beginnings, a book on real estate and strong desire for financial freedom, Gabriel has set out to create ways to start purchasing income-producing investment real estate. Gabriel is a strong advocate for financial literacy through self-education. Gabriel, welcome to the show. Thanks for coming on.
Yeah, absolutely. Thanks for having me.
Let's dive into it. So you started back in 2005. How did you get started into real estate? And what were you doing before that?
Sure. Yeah, good question. So even before that, so I joined the Army National Guard in '99. It was my senior year of high school. And then I graduated high school in 2000, and college was definitely not something that I was interested in. I mean, academia was not my thing. I stayed in school because for wrestling and for the social aspect of it. And so, a couple years after high school, I read Rich Dad, Poor Dad for the first time. That's around 2002. And that just really opened up my eyes to this other thing, this possibility of financial freedom through real estate. All my other friends, parents were telling them, go get a job, or go to college, go get a job. And that's not what I was interested in. So after reading that book, I was just inspired. Shortly after reading Rich Dad, Poor Dad, I was deployed to Iraq in 2003 and 2004. And so, on the deployment, I'm telling my friends, hey, I'm going to come back. I'm going to build this real estate empire. And they're telling me, you're an idiot. What makes you think you can do that? You've never lived, anywhere other than a friend's attic for $100 a month and never had a real job, not going to school. But I was really motivated, and I said, hey, I don't know how, but I'm going to do this. So I came back from Iraq in 2004 and then got completely out of the military in 2005. And I went to the bank in 2005, and back then it was during the subprime. So banks were giving money to anybody. So at that time I had no job, no income, and they approved me for a loan. And I thought, this is really easy. So I rented out 2 of those bedrooms in that first house, what now they call house hacking. Back then I just thought it was a good financial choice to rent out 2 of the rooms and live for less than I could anywhere else. 2006, same thing, no money down through the bank. 2007, it was a 5% down deal. And so now we're coming into 2008. So, bank financing subprime, it was pretty easy. By 2008, it was a very different story. So I had also opened up a small nutrition store in 2006. It wasn't really making any money. So by 2008, I was shutting the store down. My first son was born, and I went and got a minimum wage job. And at that same time, I went back to the bank to see if I can get another loan, because financing was so easy, 05, 06, 07. And they told me I was crazy. They said, hey, things have changed. You have to actually have a job and income and a down payment. And I was so spoiled with these no money down, subprime mortgages. They said, you need 30% down. You actually need a history of income. You need to qualify for this loan. And I had no money. And so I really just had to get creative. So I briefly remember reading something about seller financing. So I went hard on finding sellers that were in a position to carry financing. And 2009 is when I bought my first seller financing deal. And that was really the beginning of my journey in purchasing properties using seller financing.
Let's talk about some of those seller financing. So how do you approach the seller and get them to say yes to seller financing?
Yeah. So every seller who's ever carried financing for me, and I've never purchased a property using traditional financing other than those first 3 properties, if you can even consider those traditional financing during the subprime. So I have used traditional financing to refinance properties. So really everything I've purchased from 2009 through 13 had only been seller financing. And the majority of what I do now, same thing. Every seller who's ever carried financing for me, they already want to carry financing. So I've never actually had to talk or convince or even educate a seller on what seller financing is. I realized early on, after I had done a few deals, these were all sellers that wanted to carry financing. So originally I found a lot of these sellers on Craigslist. These were the mom and pop owners. They owned multiple properties. Typically they had a level of sophistication and wealth that they've built through owning these properties for a while, but they were also very hands-on. They were the ones doing the maintenance, doing the turnover, doing everything involved, very hands-on, managing the property, and they were just burnt out. And so the reason they wanted to carry financing is because either they had bought the property using seller financing, but they really understood that being the bank, for them to carry the financing and B, the bank was a way for them to have a new level of passivity without being hands-on. So it created this win-win scenario. So early on, it was a lot of Craigslist, a lot of phone calls, but these were sellers that had said, hey, I do want to carry financing. And there's a lot of reasons that sellers, that it's advantageous for the seller.
So which type of properties are you buying on the owner? I guess you said most of them are, but are you buying multifamily, mobile home park, single family, all those on?
All the above. So yeah, I started, the first seller financing deal I did was 2 duplexes side by side. It was 4 units. It cash flowed really well. It actually is, I had a very low paying job, so that those 4 units cash flowed enough to replace that income. Now I didn't stop working and was wealthy, but I was able to become financially free really, really early on. But it was also because my income was very low. So that first deal, with bank financing, it wouldn't have penciled out. But it's the big advantage as the buyer is the terms are so flexible. So when you go to the bank, they're telling you, right, like, here's the down payment, here's the interest rate. These are the terms. You either qualify and those terms work or they don't. With seller financing, the down payment is flexible. Everything I did in 2009 through 13 was no money down or very low money down deals. And, sellers are typically stuck on one, down payment, interest rate, or price, not all 3 typically. And so I found sellers that didn't care so much about a down payment, but maybe it was the price or maybe it was the interest rate that they were more interested in. Other sellers, they're just dead set on an interest rate, but they have some flexibility in price and down payment. It just depends on the seller. So a lot of times the conversation would be very casual, right? I'd say, they had advertised or had told me they wanted a seller finance. And I would say, hey, what kind of terms work for you? What kind of terms are you looking for? And then I would just shut up and they would talk and I would listen and they would tell me, what they wanted or what their needs were. And if I could give them what they needed, or at least a majority of what they needed, and the property still supported the financing, then typically it was a win-win scenario.
Yeah, I mean, that's a pretty simple concept. So tell me, like maybe a more recent deal that you've done, what type of terms did you get out with? What was your down payment? And
Sure. Yeah, my most recent seller financing deal, it was a 38-unit mobile home park. It was a just under 2% down payment and about a 200% cash on cash return. And again, going back to different sellers want different things. This particular seller is someone that I met about 10 years previous. I'd reached out to him, and it also goes to show just the importance of relationships. I reached out to him 10 years previously. He's a developer in town. I admired his work. I had no idea he owned mobile home parks, but I knew he had thousands of units that he was building, ground up construction, really beautiful buildings. But I had reached out just because I admired his work, wanted to know his story. We had kept in contact over the years and kind of what each other were doing. And so he had mentioned on town over his friend was selling a single family home. And I said, hey, I'm really looking more for value add multifamily and value add mobile home parks. And he said, hey, I have a mobile home park. And I said, would you consider seller finance? And he said, absolutely. So, part of the deal was we had built this relationship. So we had that trust, a down payment to him. A lot of times the down payment, on a seller financing deal is because they don't know you. You don't have that rapport, that relationship yet. And so the down payment a lot of times is just that security. With him, it was a low money down deal, and then the prorates and deposits and everything made it even a lower down. And for him, this guy was a very sophisticated investor, but his time and energy was really spent on these A-class riverfront, these other types of properties. And so it created a scenario where he understood the advantage of seller financing. It was a great deal for me. He was happy to get it off his plate because his time and energy is focused on other things. And so with this park, some of the value add opportunity there too is, rents hadn't been increased for years. Property management wasn't aggressively advertising pad rents. Utilities weren't being billed back. So it just created a great scenario where the property worked fine the way it sat, but there was also that upside. And I don't know too many banks that would do a 2% down deal that would with a 200% cash on cash return. So that's just kind of one of many stories.
Well, and I think that's a very interesting point that you bring up. So the 200% cash on cash is nearly impossible at 25% down. You only put 2% down, it doesn't have to be a more profitable purchase, but it's more profitable because you've leveraged that money and you've put less money into the deal. So not only do you have, a higher return on the cash that you did put in, but you actually have less of your capital at risk. It could be argued that you're trading some of that for a higher risk, because now if it drops in value, your 2% could be gone very quickly.
Sure. And that particular property I bought way below market. But going back to what you just said, I mean, you nailed it with the risk and versus the leverage. When I started buying seller financing, all the stuff I did in 09, 10, 11, 12, 13, I just didn't have money. I didn't have money to put down. And so for me, the risk of not doing the deal outweighed all the what ifs of, hey, what could happen. So all those early small multifamily properties I bought on seller financing that were no money down, I didn't know what cap rates were back then. I didn't think about cash on cash return, but I realized that a no money down deal is an infinite return. And I didn't buy anything that didn't cash flow. And so that's kind of how I hedged my risk early on, was going, hey, worst case scenario, if I were to default, I couldn't make the payment, which never happened. The property cash flows from day one. I'm not in it. I'm not in the property any money. And those properties have paid me, multiple times over the years and have increased greatly in value. I was in them no money. And so highly leveraged, I agree. Some would say is risky, but I actually felt like the risk wasn't there because there was no cash outlay for me. And it was really because I didn't have the capital to put down.
Well, and I think you made a wonderful point, is that you just did it. So you made it happen. So, you can see when you're in this world of investing, you see two very clear, distinct people. And there's those people that they're entrapped by the fantasy of real estate investing, that, it's easy money and whatever thing pulls them in.
Yes.
And they never make an offer. They never pull that trigger and do that. And having gone through that, I'm sure you can verify it is terrifying, that first offer, or terrifying when you get that first deal and you're like, oh man, I'm actually doing this. I'm in it. And that's a huge step, but you have to, if this is what you want to do, you have to get past that. And there's a point where you got to say, look, I've learned as much as I can from the books, which, the books are great, but there's only so much you can learn. There's only so much you can learn from a podcast. And, you may have done it 20, 30 times, but you can't teach doing it.
Yeah, no, you're so spot on with that. I mean, that first seller financing, I mean, those first couple were easy, right? But that first seller financing deal, I'm going, what am I missing? Like, I'm analyzing, what am I missing? In some ways that was the scariest deal, because but once I did that, it builds that confidence to do the next one. And a story I share a lot is a friend of mine. What you just said made me think of this is, we were kind of out of contact for like 10 years, and he reached back out. He was hearing that I was doing some real estate stuff. He had read all the books. He'd been listening to all the podcasts. The guy was very smart, went to school for construction management. He'd been managing properties, but he had never pulled the trigger. And once he did, I said, hey, you send me a property, we'll buy it together. You need to jump in. He was kind of the epitome of that analysis of paralysis, right, that you're talking about. And we bought a 3-plex together, a little 3-unit place together. 2 months later, bought another one. A few months later, he bought his first 4-plex on his own. But it was like those 10 years of just, analysis of paralysis. He knew his stuff, and now he's out looking at bigger stuff. And I share that story all the time, because once he bought that 3-unit and he realized, oh, that wasn't too bad, it was really easy for him to buy another 3 units. And then on his own without me, he didn't need me. He went out and bought 4 units. And now the stuff he's looking at is way larger. And so it's just, I see that all the time when someone actually takes action. That's when it really starts, because you can know a lot, but unless you take that action, it's hard to know it all and really start to learn the process and really have the confidence to go out and do it.
Yeah, I think that's another good point to touch on. So, we talked about, making that leap from wanting to invest to being an investor, and maybe to cushion that blow, a lot of people I've seen have done partner deals. So I have a friend of mine that we're still good friends today. That's how we started talking. He said, hey, I've got some money. Can we work together and place a deal? And we've been doing business since, I don't know, last 3 years together. And, that's kind of how he had gotten through that hurdle. And that's a good way to maybe soften that blow of going in there, leveraging somebody else's time, somebody else's money and experience. So
Sure.
what did he, maybe something to throw in there. So I see a lot of people looking to partner or mentor that are not offering to add value, and I see them fall on their face. So they just kind of put out a post on Facebook, "Hey, I want somebody to mentor me,"
Yeah.
and I see that all the time. And so your friend that did the deal with you, I assume he brought something to the table. So maybe what is your advice on bringing something to the table or contributing or finding a partner that would work with you?
Yeah, I think it's important. I don't partner a lot, but going forward, it's something that I would do, and I have partnered on several properties, and typically those partners bring something to the table that I don't. So the partner that I just talked about, we only own those couple properties together, but that first property, it was 45 minutes away from where I lived. He lived there at the time, and he had experience with management, so he actually managed the property. He had construction experience, and so several of the units needed some work. So he brought that to the table. So he lived minutes from the property, was able to manage it, was able to do a lot of the work on it and save us there. And then he had some market knowledge. 45 minutes can be a big difference between the market and submarkets, and from one town to the next. And so he had a really good, I know the markets where I live and the submarkets here, but he also had a really good understanding of where rents should be, because they were all under rented. Where I've partnered in other ways, there was a handful of years where I partnered with someone. He had a construction crew. He was very hands-on. I was good at putting the deals together, finding the deals, negotiating, getting a lot of stuff at the time from banks and off market. And so that's what I enjoyed doing. I enjoyed the negotiation. I enjoyed structuring the deal and the terms, and then he would go in and rehab it. So there was he brought something to the table that I didn't have, which was he could go in there with the crew. I could go put in contract the worst of the worst property that I wouldn't have wanted to touch on my own. I wouldn't have known how to fix it. It would have cost me way too much to hire a contractor. And this partner would go in and renovate the whole thing. And so we did that for a couple of years where I was just piling properties on his plate. And that was a great partnership because he brought something to the table that a skill set that I didn't have.
Yeah, so I think that's good. That's a good tie-in because we've got, we talked about owner financing for zero money. When you had no money in the beginning, and we talked a little bit about partnering. So sometimes, we don't have the construction skill or we don't have a piece of the puzzle, and I think that should eliminate a lot of fears of getting started. So if you're worried about getting something under contract, or if you want to make an offer on a deal, don't stop from making that offer because you don't have the money, because there's likely somebody else that could bring in. So you may find a tremendous deal. And if somebody came to me and said, "Reed, I've got this deal and I need some cash to make it happen, and it's a spectacular deal. I want a piece of it, but how can we work that out?" We would find something that works. If the numbers work for me to do it, to partner up with them, then it works. So I like those 2 points you brought up. So moving back to the owner financing, give us some tips of how you found some of those, or how would somebody starting out find some seller finance?
Yeah, I think it's important. I don't do any kind of mass marketing or mailers or anything like that. So it's kind of grown organically with just letting people know what I'm looking for. And I don't always say, "Hey, I'm looking for seller financing," but early on it was, I chose a neighborhood that was up and coming. When I was a kid, it was, "Hey, go to this area." And then it started becoming a place that people wanted to be. And so just kind of watching that trend. So I was very specific, and, "Hey, I'm looking for small multifamily in this area." And I would tell people that. And so I'd have a lot of conversations around that. And then I would meet sellers or potential sellers. Again, like early on, a lot of it was Craigslist and building relationships through people I met directly there, and then also with agents and brokers. Now, most agents and brokers don't invest in real estate, which is incredible in and of itself. And then you take seller financing. A lot of sellers and agents, a lot of sellers don't know, or the agents don't know what seller financing is, or assumes their sellers don't know what it is. So when I've been able to find a lot of the off-market stuff, it's really been through just genuine relationships and networking, and then trying to get directly with the seller. And then once I talk to the seller, I really just ask them what they're looking for. Again, these are sellers that want to carry financing. See, if they get paid off in full, they pay a huge capital gain. Every seller financing deal I've done have been men and women in their 60s and 70s. They own multiple properties. They already understand what seller financing is and the advantages of it. And so then the conversation I have with them is, hey, what is it that you're looking for? What kind of seller financing terms are you interested in? And so, finding those people can sometimes be difficult, but it's just having those conversations and building that just genuine network. I really think, and I've explored, potential opportunities to do other types of marketing, but I've really found that my most success has just been true, genuine relationships, just talking to people, meeting people, and letting them know what I'm looking for, and then having those conversations with those sellers.
So that's another great topic to jump into, is the networking portion of it. So I think that's also another intimidating part getting into this is, we have an advantage. We've got tons of meetups and real estate, things like that. But beyond going to those meetups, how are you building these relationships? Where are you going and who are you talking to?
Sure. Yeah. Like early on, I would just talk about it, right? Like all my friends, like I said before, they thought I was crazy because I said, hey, I'm going to invest in real estate. But when I owned one home, actually, even that very first house, it was a hot market and it was a friend of the realtor's son. So like being open to, and realizing, wow, that's a relationship. So when I owned one home, I went and made business cards saying I'm an investor, right? Like I felt, well, I own one home and I rent out 2 of the rooms, but in my mind, I had already decided, hey, I am going to be an investor. I knew that this was my route. I truly believed that this is what I was going to do. So the mindset around believing that, even though I had one home, but that second house was a friend of the gym's dad selling a property. Same thing, hot market, but I was able to buy it off market. It appraised out significantly more than I bought it for, because I opened my mouth and said, hey, here's what I'm looking for. And it's the same thing when building relationships with agents and brokers, is just letting them know in a polite way, being a loudmouth about what you do. So I talk about it. I talk about it a lot. People know, in the area that I invest in real estate. So I have a lot of people, bringing me deals, whether off market or on market. And that's how I find a lot of the properties. And just, when I meet with someone, I don't go into it with any kind of an agenda. Like that mobile home park I purchased, I had no idea that guy owned mobile home parks. I had no intention of buying a park from him when I walked into his office. Same thing with the first time I ever borrowed hard money. It was years later, but I walked into her office, probably looked like a crazy man, but I introduced myself because I wanted to at least build that relationship. But years later, when it came time to borrow hard money, it was a conversation, and she knew who I was. It wasn't just some random guy saying, hey, can I borrow some money? She had known my track record, and we'd already started building that relationship.
So you're going into these offices. So you mentioned the guy you bought the park from and that girl, the hard money.
Yep.
Did you have a purpose or agenda then, or what? You just went in and said, hey, I'm Gabriel. Let's talk.
Yep. Yeah, pretty much. The developer, he was building some really neat buildings down in the campus area here, and they were going up, and I just thought, who is this guy? Like these are buildings like we don't have in town. Who is he? So I was just curious. I wanted to know his story, and he was gracious enough to just share a story. He was buying a lot of small multifamily in the area back in the 70s when he was going to college. And he calls himself the accidental developer because he started buying these properties because they made sense. And next thing you know, he was building these great buildings. So I truly went into that with just, who is this guy? What's he doing? Early on, I didn't feel comfortable borrowing hard money or private money, but I knew that could be something in the future. So I wanted to build that relationship, get that face to face time, and then go into relationships too. You just never know. Like there was a woman I reached out to years ago who was offering seller financing on Craigslist, and we talked, and she owned multiple properties, and the terms that she was looking for didn't fit what I was looking for as a buyer. She was very successful with selling properties that way. But it didn't really fit with my model. And I very much could have ended that conversation. And then we started competing on properties. And I very much could have looked at her as just competition and not had that relationship. But at one point she said, hey, we keep competing on these properties. If you get this next one, can I finance the deal? And so she was one of my early private money lenders. The very first woman that ever carried financing for me in 2009, when I paid her off in 2014, she said, hey, what am I going to do with this money? And I said, hey, you can re-lend it to me to buy a property. And she kind of laughed and was like, yeah, haha. And then 2 months later, she's like, wait a minute, were you serious? And I said, well, yeah, I will. Do you want to finance the next deal? Because we'd already had that trust and that relationship, that proven track record. But also, she was in the same position she was before. She was older, didn't want to actively invest, didn't want to put the money in the stock market. We had that relationship. She wanted that passive income. And so that relationship doesn't end just because I paid her off. With this other woman, it didn't end just because, it didn't not start just because we were competing on properties. We recognized, hey, we're both investors. Maybe we'll work together. And that was years later. But again, we had built that relationship and trust because I knew she was buying property. She was an investor. She knew I was an investor. And it just makes sense. You just never know where those relationships are going. I don't go into any of them with really any intention other than just building a relationship.
Yeah, well, and that is important. I think, and I don't personally consider myself to have very good social skills, but almost all of my deals have involved somebody in some capacity that has had some type of relationship and some trust there, whether it be borrowing money or whatever it may be. But yeah, you're absolutely right. You have to have some type of communication, networking skills. And today it's much easier than it was in 2005 when you were starting, because there's,
for sure,
at least into the Detroit market, there's probably 30 different meetups to go to, almost every day of the week. Not right now, but normally there's a place to go. But so you said something earlier that I wanted to zoom back on. And you said that you had, after you bought your first house, you said, I am an investor.
Yeah.
And, although I don't think many people talk about this in real estate. So for smoking, for example, they say one of the best psychological ways to kick the habit is not to say I quit smoking, because you're still a smoker who quit. The most successful way to say I'm not a smoker. And then mentally it changes who you are and how you act. And then instead of saying, hey, I'm an engineer, or I'm a W-2 employee and I invest as a hobby, or I do that, you said, I am an investor. It's who I am, and that's how I act, and that's how I'm going to proceed. And I think that's fascinating that you figured that out so early.
Yeah, and I love your example with the smoking, because I had a friend at basic training when I was in the Army, and he came to visit me, and he was a smoker, and he would always say, oh, I'm trying to quit. Same exact thing. I told him those exact words that you just said. I said, man, you're always trying to quit. I was like, just say you don't smoke. And so like the next day, someone offered him a cigarette. He's like, no, I don't smoke. And they're like, you just did yesterday. He's like, no, I don't smoke. And he quit that week, like just cold turkey. Like that whole week he was, and but it's like he got it in his mind. He started speaking those words and he believed it. And that's how he handled himself. So it's, what we tell ourselves is very important. And then what we do with those actions are important too.
Yeah, we will go through great lengths to protect who we believe we are as an identity. And if you believe that you are, a W-2 person and you want to be an investor, you're never going to go further, because that's who you identify as. I guess I shouldn't say never, but it's less likely, but if you say, look, I am an investor, and right now I'm just holding on to this W-2 job until I get to where I am, because who I am as an investor, I think that's a major hurdle that'll help a lot of people get to that next step.
Yeah, you're absolutely right. And it just opens doors. I mean, I'm working with a few people, just friends that have reached out that want to start investing in real estate. And it's easy to sit back and say, oh, relationships and build these relationships. But the reality is, it can take a while, right? It can take a while. Like I knew nobody in the real estate business, no one with money starting out. But these handful of people that are just getting started, they're realizing like, oh my gosh, this person I've worked with owns rental property. I had no idea. My neighbor is planning on selling their property. I had no idea. But because it's in their mind and they start having those conversations and they're looking at through a whole different lens, they realize, wait a minute, people actually want to talk about real estate. They want to talk about investing. And so it's kind of, it's pretty neat to see these individuals just getting started in real estate, and they realize that there's actually people already in their life that are doing it or somehow involved directly or indirectly in real estate or in investing. One guy in particular had someone that was like, yeah, I would lend you money on the right deal. And he's like, I had no idea that's something that this person did. And so it's, it just, as I said in the beginning, when I started having those conversations, I think it's just important for people to do that, because you just don't know. Even if it's not in your direct circle, it may be someone in your circle or indirectly connected in some way.
Yeah, you gotta let the world know what you're doing, and I'll share with you. So Garrett, the partner I talked about that partnered with me, that had the money, and we did a deal. One of the biggest lessons I learned from him was I had always done flipping houses to myself. I didn't really talk about it with a lot of people. I mean, I wasn't ashamed of it, but the point of bragging seemed silly.
Yep.
What I didn't realize is that, so Garrett is a little bit the opposite. So he's like posting pictures on Facebook, like, here's this house, here's how it's going. And, when he did it immediately, I was embarrassed. I was like, man, this house looks terrible. It's a mess. The contractors left it unswept. And, I noticed that the tile's crooked or something silly. And, but what I didn't realize would start happening is then people start calling me like, hey, I got this deal. Do you want to buy it before I show it to everybody else? Or, hey, I've got 50 grand. Can I give it to you to lend? Can I lend it to you? And all these things started opening up, and I'm like, wow, this is amazing. Like, people are coming to me with deals when everybody else is complaining there's no deals to be found, and I've got them coming to my inbox, and all because we started posting pictures on Facebook. So
yeah.
So what else are you doing to kind of get that word out?
Yeah, it's interesting. Like I mentioned before, I don't directly, market or advertise, but this last year, and just talking about social media a little bit too, I was not on social media for, almost 3 years, because I didn't, and I was actually very private about a lot of what I did, right? It's kind of just quietly building my real estate portfolio and doing my thing. But then I'd get in conversation and I realized, like, there's these platforms, right? Like Facebook and Instagram and things where, and there's a lot of junk on there, a lot of crap on there, right? A lot of negative stuff on there. And I realized I'd get in these conversations with people and they're like, oh my gosh, thank you so much. And so I did start getting active on social about not even so much real estate, but just trying to put something positive out there. And it's the same reason I do these podcasts, and I've, done some speaking events, because I just really want to give back. And will that turn into a deal or a partnership someday? Maybe so. I mean, I've done almost 100 just 30-minute video chats with people who have reached out interested in investing in real estate. Sometimes it's specific to seller financing, and sometimes they're new, sometimes they're experienced investors. But it's just my way of giving back. And do I think that will come around? Sure. Do I don't care if that becomes a deal or not. Like, at this point, I want to just inspire other people to get started in real estate, or to be able to build their real estate portfolio and receive that financial freedom. It's different books and different things people have said have impacted my life. And so I really got on social media to try to just, if I could positively impact just one life in some way and be that person, I feel like I'm able to give back and do my job. And it's been very rewarding when I've had a phone conversation with someone or a video chat with someone, and they message me back and say, hey, I just closed on my first deal. Or, hey, I'm looking at this property. I did my first seller financing deal. Or I had an opportunity to speak in New York, and this guy came up and said, hey, I heard your Bigger Pockets podcast, and I got on Craigslist because I kind of thought that was a joke, was Craigslist. And I got on there and I bought my a 6-unit place right after that. And so, like, having someone share that story with me, that means a lot to me. That's why I'm out there, sharing this information, because I just want to be able to impact people's lives. If that turns into a deal one day, great. If not, that's okay too.
Yeah, and I can say for certainty that it does turn into deals. I mean, so I have my own personal a friend that's been a huge mentor to me, and I can say just on my case, I have sent him investors. I've sent him, people to do business with him, and I almost guarantee I've made him a lot more money just from the things that I've sent to him than the time he's given me. But so I know it goes both ways, and I'm sure a lot of other people do the same to him.
Yep.
So and I agree. I think I need to up that on my own game, is to give back as much as I can. I mean, I do try to do it when I can, but I like that you make an effort and a commitment to make it happen. So.
Yeah, and it wasn't always that way. I mean, like I said, I was very kind of quietly building this, but then it got to a point where I felt like almost like I felt like an obligation, like, hey, I need to share this information. I want to give back. People have reached out asking, and it's very rewarding. I mean, for them and for me as the giver, and and for the receiver. So I think that's something that plays a big part now. Like, I enjoy doing that. I have 30 minutes, a day that I could jump on a call with someone and do Q&A, and it's great. And I love those updates. I love those messages I get when people tell me that they close on their first deal. It's very rewarding.
Yeah, it's definitely exciting to get that feedback. So let's jump back onto getting into that first deal. So we talked about the financing. We talked about kind of the attitude, the networking. What else are we missing? Is there some other hurdles that people are going through to get there? And what else is there?
Yeah, I think with seller financing in particular, I mentioned it before. A lot of it's just listening to what the seller's needs are, and I think a big thing is not assuming what the seller's needs are. So early on, a lot of these deals were shorter term deals where there was a balloon payment in a couple of years, and still, like I said before, I hedged my risk with, hey, I don't have money into this deal, and they're cash flowing enough where I'm going to make money in this short term. But then I realized as I met other sellers, they wanted different things. So I had a couple early on that were in their late 70s. They carried on a 30-year fully amortized loan. I'm probably not going to pay that off or refinance. And at first I thought, gosh, I'm not putting a date on their life, but statistically, like, they're probably not going to live to be 110. But I heard what they told me, and what they said was, hey, we want income for the rest of our lives. And when we pass away, we want our adult children to have income to continue on. And I found that a few times, because also early on I was like, gosh, a lot of these sellers have adult children my age. Why wouldn't their kids be interested in owning these properties? There's a lot of upside. Most of these properties were also poorly managed, under rented, deferred maintenance. These sellers are really, really good people. They're usually not the best property managers. Typically, they're just tired. They're burnt out. So they're great people, but they either have another job or another business, and they've built some level of wealth through real estate. That's not their full-time thing. And so there is that upside for you as the buyer of the poorly managed, under-rented, deferred maintenance, but you're taking the headache away. They've been the maintenance person and the repair person for 30-something years. And that's also why their adult children kind of look at it as like, I'm not interested in that. I've heard mom and dad complain about, the toilets and this crappy tenant and these repairs. And so, just listening to those things, can be really beneficial, because every seller is in a different position, and then those terms are negotiable too after you close. So I've had sellers where, a balloon payment is coming due, and, you can very much say, hey, would you like to extend the loan? Or sometimes the seller asks, hey, do you want to extend the loan? I've had sellers be willing to negotiate the interest rate down after we've been in the loan for a while, take the loan off the property. There's just so much creativeness that you can do that a bank wouldn't allow you to do typically. And it really just, again, comes down to that relationship. Even when you close a deal, just, early on, I was hand delivering checks to some of these sellers just to build that rapport. And I like these people. It's important to not just build their trust, but to and show them, hey, I'm going to keep my word. But a lot of these sellers have multiple properties. So who are they going to sell their next one to and their next one to? It's going to be you, because you know them, you've shown them they can trust you. But the big thing, just don't assume what the seller's needs are. I get asked all the time, like, hey, what are typical terms? There are no typical terms. It's not, every seller doesn't want 20% down, interest rate at 5%, balloon in 5 years. It just really varies, and I just try to listen to what their needs are and try to solve that problem for them.
That's great. That's probably a great point to stop, because I don't think I could say anything better than the way you just framed that. So it's a wonderful thing. If you're listening, go on to Craigslist, look for those seller finance deals. Look for a partner to work and fill in the voids that you don't have, and go get that first deal done. So that's great advice, Gabriel. I'm glad you came on. How can somebody reach out to you if they need to get a hold of you?
Yeah, the best way to reach me, Instagram, Gabriel R. Hamel, or if you search Gabriel Hamel, you'll find me. I'm on Facebook, and then my website is hamelinvestments.com.
Excellent. Well, thanks
Yep.
for coming on, and I appreciate you sharing your experience with us.
Yeah, absolutely. And I'll put a link to this show when it comes out on the site too. And there's a bunch of other podcasts on there that I've been on, and you can get a hold of me through there as well. So I appreciate you having me on, and I hope it adds some value for your listeners.
All right. Thank you.